this is a very important topic that we need to discuss. And I think we are we've missed many decades because we never focused on infrastructure. Infrastructure is the backbone of majority of our sectors, whether we talk about improving our supply chains, whether we talk about improving our exports, our manufacturing, or even civic amenities in the cities. Infrastructure is something that forms the backbone of all these sectors. And when we talk about infrastructure, it is not limited only to big projects, whether it be about basic civic amenities, including supply of water in our homes, or about basic sewerage and drainage facilities in our area, or it be about developing highways, expressways, and even to the extent of developing exports. So infrastructure can be of different types. And when we talk about infrastructure, if we see majority of the reports that have come out, they talk about infrastructure deficit in our country, and deficit to an extent that if we have to cover it will take probably many decades. That is how we lack in infrastructure, and the majority of the biggest problem in it is about infrastructure finance. How do we fund that? So to discuss about that, we have a very good panel today. I'll just give a brief introduction of everybody. We have Sujit with us. Sujit is the Chief Economist for National Bank for Financing Infrastructure and Development. He is one of my seniors from Hyderabad Central University. So National Bank for Financing Infrastructure and Development was started in 2021 by the BJP government. As you all know, the government from last 5-6 years has been focusing a lot on infrastructure. We've talked about capital investment increasing, and NaBFID is one of the initiatives that the government has taken to improve the condition of infrastructure finance in our country. We welcome you, Sujit. We also have Payne with us. Payne is the director of SPMRF, and I'm sure everybody is already knows Payne. We have Kanagasabapathi with us. Kanagaji is the secretary of SPMRF. We have Pathikrit with us. Pathikrit is the senior research fellow at SPMRF. इनका मैंने बहुत brief introduction इसलिए दिया है क्योंकि I am assuming that majority of you you've met them, you all know them. Kumar is also with us. He's a businessman settled in Sydney. So I'll not take much time because topic बहुत बड़ा है and we have a very good panel.
Thank you. We are here primarily to hear from Sujit ji, but I'll just give a small understanding of what is happening. For a long period of time, the issue for India was that even if you bring in investments, you require infrastructure to absorb the investments. For example, if you tomorrow decide that I should have say 100 flights coming to a particular airport from tomorrow, you cannot have it till the time you have the more number of terminals. You cannot increase ability to export unless you have more number of ports in place. So that infrastructure in place is very critical, but it is easier said than done because infrastructure primarily, when you talk about big ticket infrastructures, it requires a lot of money. It has a lot of gestation period, 10 years, 20 years. Not many companies, not many organizations would have the ability to absorb problems for 10, 20 years and then get profit. So it requires long-term financing. We do have a lot of development financing, financial institutions, but perhaps there was a requirement for something very, very specialized. And why it has come? NaBFID, the organization that Abhishek mentioned, and of which Sujit ji is the chief economist, it is preceded by something called the National Infrastructure Pipeline. National Infrastructure Pipeline, which was conceived by Prime Minister Modi in 2019, entails investment of $1.5 trillion in India's infrastructure. Around 9,000 projects. So when you see PM Gati Shakti, when you see the metro rails coming up, when you see bridges coming up, when you see large amount of investments in the highways coming up, all of that is part of National Infrastructure Pipeline. And to finance those long-term infrastructures, you have the National Bank for Financing of Infrastructure and Development that was created as part of a parliamentary act in 2021. There is a larger vision to it, and it's not just about financing. We will talk about that later, but from here on, we would love to hear the chief guest. With your permission, Binay ji, over to Mr. Sujit.
Really, I was invited to be part of a panel at ET Conclave, Economic Times Infra Summit. And the summit was all about kind of finding out what all needs to work to make infra happen. Specifically, the issues that has been known to everybody, but unfortunately or fortunately, the solutions have been very hard to come by. When Abhishek asked me to be here to interact with this team of investors, I had two issues in mind. Whether the solutions that will emerge out of this room will power India's thinking over next decade. The reason being is that infra is as diverse as it gets. You start with roads, which everybody is familiar of. The speed of road construction in India in past 10 years has more than doubled, right? Every year, every day, in fact, 30 kilometers plus, that was the construction pace last year. Not only the length of highways, but the quality of highways, access controlled highways. The place that I come from, Mumbai, it has been a commercial center for most of our memory. But it never felt like that infra has been keeping pace with the ambition that city offers. But now when you visit Mumbai and you just go across, whether it is Atal Setu or the corridor that sea-facing corridor that just have been unveiled, you will be mesmerized, I will tell you. Those of you in Delhi may not be appreciating this difference because I come from a place which is a little congested, right? And that's why I wanted to just highlight that. See, it's well established that of all the spending that the government does, the biggest multiplier comes from infra. Investments in infra. The estimates are closer to 3x. 1 rupee spent gives you 3 rupees kind of growth over time. But that's the half of the story. Why it happens is because it is able to bring down what we call logistics cost. Before a product becomes available for a consumer, so from the factory gate, it lands to you, everything that we define in infra comes into play. Right? From communication, to transportation, to the last mile delivery. That's where infra makes the difference. The cost which is borne by citizens every day, day in, day out, whether you walk in or you sit at home, if it gets delivered to you, it is because the infra has just I would say, leveled up. When we think of infra, what comes to mind? We often compare.
Sujit, थोड़ा सा distance कर लीजिए, थोड़ा echo हो रहा है.
Yeah, so we often compare. I think this is fair. You can hear me. We often compare ourselves with the developed economies, right? Some 20, 30 years back, when we used to watch even movies, at least many of us may not have visited those developed markets. We used to fantasize in a way that whether we can have this kind of roads in India, the kind of ports that we see in movies, especially Jackie Chan movies from China. We think that whether we will have ships of that size ever in India docking at our ports. The airports, when we see today, India has one of the if you rank top 10 airports globally, India will feature prominently there. That's the quality of our airports. The capacity that we're adding every year is more than what even most of the advanced countries were adding in a decade. That's the pace at which we are building our infra. But that's the outcome part of it. What has gone into it is what is the story worth telling and retelling. Like just you got a brief that in 2019, we had this what called National Infra Pipeline. Now that pipeline was a very bold document to begin with. First time a government put its mind to estimate and envisage what is required from a decade perspective. We had planning commissions earlier, right? Every 5 years you got a new document here, all set of numbers. But that was more about how to devolve funds to lower tiers of government. It was not about arranging funds for the government country. When NIP was envisaged, it was not about diverging fund down the order. It was about owning it up. It was getting private capital in so that India's vision to become Viksit becomes a reality. I put my hats off to the guys who have done this document. The kind of listing of projects across sectors, the meticulousness which has gone into it is something to be really marvel about. Now, what this document identified was that even the extant listing of projects required close to 111 lakh crore worth of funding, and conventionally, it is the government has footed the bill. right? 85% of spending was coming from the government purse, budgetary allocations, coming across ministry, railways, ports, road sector. So the government was the first mover and at the final mover. What has happened a decade prior to that, we started with a very grand vision early in 2000s that now India is arrived, India can fund its growth. The global opinion had turned favorable to us. People were taking notice of India. They were trying to get into India. But unfortunately, after 2010, we had a series of accidents, specifically in the infra space. The projects got delayed. Sometimes even regions you can call harmless, but they are not so harmless. The court judgments which came on the process part of it, right? The processes were not sanctified, violated for certain decisions, and then the whole projects got cancelled. Getting it? Projects got dropped halfway. People burned their money there, and that is how you had a series of NPAs coming from banking sector. What happened is that after 2010, banks actually kind of not only shut down its infra lending, they shied away from even praising projects. You lost the commercial wisdom which was required to assess a project whether it is fairly commercially viable or not. From 2010 to 2015, the government was also not very, very clear about the path it was taking. The resolution was the first priority. What got stuck, let's resolve it first. And thereafter, to think of new institutions which will power the growth over coming decade was more of an afterthought. After 2015, when the government first decided that let's get the banking sector in order first. Let's clean the balance sheets of banks and the corporates who are somehow stuck there. Now, what it started was that first recognizing where the problem is, right? You got a new act, what you call IBC. The act give you a mechanism to address market failure in that sense. Now people could take decisions in the comfort that it is a market-based sanctified, resolution. Nobody is kind of just giving a discretionary certificate that this is the valuation, you should take it. Then only the courts come in because it's subjective. But if it comes from market, it's very objective. Everybody has the same access of information. They have the right to put a bid over it. So the resolution happened. In turn, by 2020, before the COVID hit, we had resolved that big problem. Big exposures got cleaned off the bank's balance sheet and banks were capitalized. However, banks were still not coming forth with funding for infra. So you had very healthy banks, very healthy balance sheet of corporates, but funding for infra was still quite a distant away. So what it did was, government got in act of thinking again. Who should be doing it, if not banks? See, the problem in 2015 was that banks were saddled with NPAs. In 2019, banks were healthy. Corporates were again, their balance sheets were also remained. Those guys who had overdid something, they also learned their lessons. Some of them lost their ownership also on the projects. But eventually, as a country, we got healthier corporate balance sheet and healthier bank balance sheet. But the funding for infra was not coming because banks still had memories of those hard days of early 2000s. When you overlend in a way, the cost is going to come back to you after a lag. And investors are not willing to take that risk again. Getting it? That is where the memory of having a dedicated development finance institution got back. So after committees, deliberated on this, whether we should have a DFI or existing institutions should be empowered to do this task. Government took a very bold step that day when it said that let's start afresh. Why to burden with legacy when legacy is not very pleasant? When the memories of failure is so high, so frequently occurring in your mind, it's better to just detach from it and start afresh. Starting afresh, while it is appealing, is equally daunting, challenging. Why? Because you have to build everything from ground up. You have to get the people on board, you have to get regulations in place, you have to get capital. You also have to fight that bad memory because people will be questioning you. If they could not succeed, how should we trust you? Getting it? From that phase to today, when I speak, this institution, which has a just operational history of just about 3 years, in December 2022, in fact, the act was in 2021, April 2021, the board was constituted. June 22, the management started coming in. Actually, August 2022, the MD first came in, then the MDs came. And recruitment started happening in 2023. Somehow on very small pool of talent, which were on deputation from most commercial banks back then, the lending business started. So in December 2022, the first loan was done by this entity. From December 2022 to November 2025, when I speak this This new institution has already appraised bankable projects more than 4.8 trillion rupees. That's close to 5 trillion rupees. What I say bankable projects, everything is in order. You can take a commercial bid on it. Of this 4.8 trillion, 2.8 trillion is money which we have committed. That's sanction. Money is already committed to developer. Whenever they need the fund as per the stage of completion, they can avail from us. 1 trillion rupees we have already disbursed. That money is already given to the developers to do that thing. Our balance sheet is close to 1 trillion today. It has happened because government started with a very sizable capital. 20,000 crore of capital was the seed capital for us. That's why one of our directors, he used to say this: we are the richest startup coming from the government. Right? Before anybody could join, the capital was there. It rarely happens. It happened because the seriousness with which government took it. Abhishek was telling about the capex. See, between 2019 and 2024, capex as a share of GDP from central balance sheet has gone almost doubled. From 1.78%, it is 3.2% and above. Last year, 3.1%. See, that is the kind of allocation shift that has happened. We are talking of as a ratio to GDP. If you look at the composition of budget, it was very hard to find even 10% of your budget on infra, capex, earlier. Because the servicing the loan itself was a big ask. 1/3 of your revenues goes for servicing existing debt. To find money for something like capacity building is a tall ask, because we are not so rich country yet. We have to cater to so many welfare constituencies, especially in democratic setup. But the government was mindful. You not only need it today, but have a better tomorrow also. Right? This is the difference that this government has made. It has been thinking about Viksit Bharat in all earnestness. Over 20 years, what we need, the sizable estimate we did internally at NaBFID, because we also had a conclave just a couple of months back, we need close to 800 lakh crore rupees. Even at the current estimates. I'm not saying we need to double it up. Even if the current projections are sustained on capex, which is very hard task to do, 800 lakh crore is what is required to build infra, of which half is required for building our cities. So, in a way, 3/4 of our incremental infra is going to get built. So, if you look at last 100 years, whatever we have built is just a quarter of what is required to be built. So, you see the space for funding which is required out there. Now, if we go by the existing framework where 3/4 of funding will come from government, you will never have sufficient funds. In a democracy, you will always have other priorities, and with elections coming every 5 years, you never know which government has a different priority. But country needs it for a very long tenure. 20-25 years is what we have, demographically speaking. Right? After that, we will also start aging. The problems that you are thinking about Japan today or China today will hit us also down the line. We will also age. We will have more people to take care of than people working and generating income. Before that happens, we have to get rich. Before we get old, we have to get rich to become Viksit Bharat. That's what the ambition is. It's not easy. When World Bank last year came out with a report, it says that only few countries have been able to do this in last 30 years. The best peak of globalization, there is just about 34 countries managed to become Viksit. From per capita less than $3,000 to $12,000, $13,000 plus become Viksit. We can do it. In a generation's time, we can do it. China did it. There have been countries, like 30 countries which I'm mentioning, have done it. Whether India can be that country, with the kind of demography we have, the kind of size we are commanding, and the kind of hostility we are encountering today from the global economy. It all rests down to what we can do in India. When world is not favorable to you, it is the domestic constituency that has to rise up. And that's our strength also. If you look at our domestic demand, 2/3 comes from consumption, right? And the consumption alone will not take you there. For having incremental growth, those of you have studied economics, you know that what we call, ICOR, incremental capital output ratio. So to get a 1 rupees of growth, you need 4 rupees of capital. That's a simple funda. So if you want to grow at 8% plus, which is required to become Viksit Bharat, your investment rate cannot fall below 30%. Even when your productivity is pretty high. Historically, you had a productivity of around 5:1. For 1 rupee of growth, you needed 5 rupee of unit of capital. Last 10 years, because of investments in infra, you have been able to bring down closer to 4 now. So even at 30-31% of investment rate, you are able to pull off 7% plus kind of growth. But to sustain this for next 20 years, miracles are required, and miracles will happen when you have infra in place. How do we fund this? Historically, if you survey across globe, who has done this? Mostly governments, but governments at that time had a different challenge, right? In fact, some of you who have history, sense of history, can go and look back how the finance evolved in Europe, how the bond market started developing in Europe. The bond market came in a response for government requirement for funding, specifically war. When governments were short on funds, they issued long tenor bonds. So instead of forcing people to pay for expedition, let's say Napoleon's war in Europe, they issued bonds, long tenor bonds. Those who were willing to have part with their surplus for certain return, they could do it. The bond market was a financial solution to a real practical problem world had. Our infra funding is also getting solved via that route. So if you look at globally, it is the patient capital, what you call, insurance, pension, and provident funds, which have a liability coming down 2 to 3 decades rather than today. So when you join the workforce today, your PF starts coming, deductions start happening. That PFs get accumulated by whether under EPFO or NPS, whatever it is. And the commitment is that when you retire 25, 30 years down the line, you will get some annuity from your corpus. Now, these money need to be invested for assets which will be that durable. Where else you will get assets which have more than 20, 25 years of durability other than infra? So what they did was they were buying government securities. It is safe. Government can offer longer tenor. So that's the happy affair. But government doesn't pay enough. Today, the cost of government security, if you look at the bond yields, it's 6.5% for 10, 15 years. If it is a 20-year plus issuance, it's closer to 7%. State development loans, closer to 7.25%. Now, whether you guys will be happy to have that kind of return on your investments, and 97% of funding which insurance, pension, provident funds are generating goes to those kind of assets. So returns are not there adjusted for inflation. Now your money will be at serious risk if these guys don't take risk of generating little higher return than what is promised by government. Fortunately, infra has emerged as an asset class which can give you superior returns with risk relatively moderate. Why I am saying moderate? Because world has changed in the last 10 years. What we learned from the mishaps of 2010 was that infra needs a supporting ecosystem. It can't be left on its own. You need to have government which backs you up when things are going tough, which eases the path in terms of regulations, which makes longer term capital available to you when required, and resolutions when things go really messy. So court should not take eternity to resolve a conflict. Getting it? This is the learning that we had from the decade of 2010s. So 2020s, what we are witnessing today is cumulative learnings of 2010s. Why I say this is important? Over next 20 years, if we are able to tap into the pool of capital that is available with insurance, pension and provident funds, we will be happily doing whatever is required for funding infra. Why? Just give you context. Today, the whole banking deposit pool is close to 250 lakh crore. That's the banking deposits, out of which close to 20% comes to government securities as a SLR, right? So that's the money. Mostly SLR funds what? Government budgets, out of which only 10% goes to capex. So less than 2% of banking deposits every year goes to infra via government route. Now, if you look at insurance, pension and provident all put together, insurance has a AUM today of close to 75 lakh crores. Pension and provident funds put together, when I say provident funds, it's EPFO money. EPFO has close to 30 lakh crore. And NPS pension fund, it has close to 15 lakh crore. All put together, you have 125 lakh crore. That's the count of money. AUM sitting in alternative, avenues of capital. And they are growing at more than 15% per year. While bank deposits are growing at 10% a year. Now you do the math. 250 lakh crore growing at 10% generates 25 lakh crore of every year flow. Out of which hardly 2% I said goes to funding you. Bank's exposure to infra has not gone up. Between 2010 and now, earlier it used to be close to 12% of bank credit going to infra. Today is just about 7% of bank credit going to infra. So banks are not funding it. But these institutions, if they are enabled to invest in infra, can fund your dream for 20 Viksit Bharat. But there is a catch. Because they are so risk conscious and their memory is so live, they have not forgotten the 2010 episode. Now we did a study to bring out what is the default rates in segment. We found the default rates have come below 1% for last 4 years. So what happens is that when default happens, 100 rupees lent, the money which is going for not going to come to you is rupees 1. Getting it? And there is a call, exposure at default and probability of default. You multiply that, you get loss given default. So when default rates go down, the risk perception that I have of losing my money also goes down. And there is a tool where we call credit enhancement, where as institutions, what we are saying is that even if default happens, I am the first to pick the bill. You should not worry. Your investment in infra is safe. You get superior return with safety as much as you can get. So the game is that for next 20 years, at least 25% of incremental money should come from private sector. And that is where NaBFID gets in. Like I said, 3 lakh crore that we have done just in less than 3 years, 80% plus money is going to what? Private developers. It's not the government funding that we are doing. Government is doing what it has been doing. It has its institutions doing for that role. There is IRFSC doing for railways, there is PFC doing for power, REC for rural electricity, NHAI is doing its own road sector. So government has set of institutions, segmental approach taking. NaBFID is an institution which is required to do holistic. It is also required to unbottleneck the system. Wherever you feel like you are stuck, there should be somebody which is dispassionate at it, but empowered enough to talk to the authority and say that this needs to be done. We can't leave it for future. So coordination with government authorities, policy adequacy, bringing confidence back in the market, enabling market to fund infra with new kind of instruments, bringing the risk perception down, sharing the risk with private parties. This is what NaBFID is doing. More importantly, NaBFID is building capacity. Capacity to whom? To state governments. At center level, we have fixed most of the things, but at the state level, we can't say so. Not many states you have which are doing quality infra today. Even the large major states, 20 states we talk about, even of them, handful of them, you can just name them. They are doing infra of standards which central government is doing. So capacity building is a big issue. Then there is a problem of what we call the third tier of government, urban local bodies. Like I said, 60% of our population is going to stay in cities over the next 20-30 years. Today it is close to 35%. So what we are staying right now as a country over 3 millenniums of history, we are going to add in 30 years. That kind of influx, whether can be managed with existing set of institutions? Sorry. We need new kind of governance, we need new kind of funding, we need new kind of regulations. So that private interests are protected, but doesn't mean that profit goes to private and loss goes to public. So the risk sharing has to be very proper, right? It has to be in a way where democracy can proudly say that yes, we did it. We are not China, we don't want to China. I'm proud to be an Indian, and the Indian ways has delivered, the world has seen. Not many countries can be proud of having 7% growth for 30 years and promising 7% for next 20 years with a population of more than 1 billion. So we are unique. We are doing it in a way which is historically unprecedented. And I am pretty sure whatever little bottlenecks that I just spoke about, we will overcome them and we will do the funding what is required. So 7% of GDP is what we need to spend on infra to get 7% plus for 20 years. But currently we have 5.5% of GDP. Incremental 1.5% of GDP is where I have just pointed out the patient capital, insurance, pension, provident funds. If you can get them in the game, even if the banks are not lending, we can do it. That's the summary of what I just laid out. We can have a discussion on this. I hope it has just raised a few curiosities in your mind. I'm open to you.
If you look at it politically, what the government has done, if you look at the entire matrix, at the grassroots level, look at it from the perspective of Swachh Bharat, 10 crore, 12 crore toilets being made, to say Ayushman Bharat, where you're giving almost 50 crore people health insurance, to Jam Trinity, Jan Dhan Aadhaar Mobile, through which you have saved $30 billion by ensuring that you directly pay to the bank and not through a middleman. Then you look at Mudra Yojana, promoting grassroots level entrepreneurship, where 34 lakh crore have already been given. Then you look at it, Startup India, how India has been made the third largest ecosystem of startups in the world. Then you look at it, the tax concessions in terms of GDP, introduction of GST, and then massive reform in GST, reduction of GST rates. Income tax rates, rebates in terms of you won't have to pay any tax until the time up till your 12 lakh per annum income. Then you look at national infrastructure pipeline. Look at the entire spectrum. So how much investment is going in? One thing we have to understand, what is being done as part of national infrastructure pipeline, you would have its outcome in the next 10 years, 15 years. Unfortunately, for the last, since 1947, governments, because they have to win elections, they only invested in projects which will give return or something will be visible in the next 2-3 years. GST reform is giving benefits now. Many of the states and political parties who were opposing it, today they are reaping the maximum benefit out of it. Similarly, this is something which is visionary. But I have a small question for you, sir. To the best of my understanding, this bank is being renamed as Infrastructure Development Bank. And I think this is becoming the ADB for India for Global South financing. Is it true? And we have a larger plan beyond India.
I think Delhi should know it better. But I can tell you, even under the current act, the Parliament Act, which we got in 2021, all projects which share boundary with India are very much in the ambit of funding by NaBFID. So we can fund all projects which we have with neighborhood, right? Projects which are with Bhutan, Bangladesh, Nepal, Sri Lanka. We can just name it. Of course, we don't want to name one neighbor, but we can do it. So we are already in a position to become a multilateral institution. While the mandate is holistically for infra and only infra, but infra with shared borders is possible. So whether we can evolve to become a ADB, if the government chooses to broaden the net, who stops us? The capabilities are there that I have just told you that within 3 years, 5 lakh crore of projects have been appraised, 3 lakh crore of funding has been committed to, 1 lakh crore money has been already disbursed. That's the speed with which we are working. So capability is there. If the mandate is even bigger, we will rise to the task.
I think you are saying less than what you know.
Now I request Kanagasabapathi ji. Now I request Kanagasabapathi ji is an economist and also has a recent experience with politics. Also, sir, I would request you if you could cover about the politics behind this. Given if we see the growth between 2000 to 2014 during the UPA regime, especially 4 to 14, in fact, there was no much discussion happening about infrastructure. But how the priorities have changed post 2014, how this government has focused a lot on infrastructure, and that shift, if you could talk about, that would be great.
Thank you. Dear Sri Sujit Kumar, my dear friends Binay, Pathikrit, Abhishek and others. In fact, when our director Binay introduced Sujit Kumar to me, I was thinking that as students in those days, 70s, 80s, and as teacher later, we used to study. I am a finance teacher, by the way. So we used to teach IFCI, IDBI, when they were promoted in the 1950s and 60s and 70s by the government of India, to help the industrial sector, particularly private sector. The amount of money is very, very minimal compared to today's figures. We speak in trillions of rupees. In those days, few hundred crores, few thousand crores. I was also thinking when our friend Sujit was telling me while we were coming here, that, after the Second World War, two financial institutions were established at the global level. One was World Bank, second one IMF. So the World Bank was for long-term loans. So it's similarly patterned. So though now we have a lot of improvements. And here I have come more to learn from him, because even I don't know much about what kind of work that this bank is doing. But this is a very revolutionary step, and it is necessary as a country that is emerging as a global force. Certainly, we need to spend more and more on infrastructure. So this is a very, very important initiative taken up by the government. And Abhishek was telling me to compare the earlier system with the present system. We all know that during the earlier system, infrastructure development was really not up to the mark. If there was a famous quote, A.K. Antony, the then defense minister, said, if we lay roads on the border, then it will be easy for the enemies to come and attack. So that was the kind of system that we had, ministers that we had. Now everything changed. Now you know what is happening at the border and all. So huge infrastructure development is happening now, thanks to the present government. But one problem with states like Tamil Nadu is that in infrastructure development, there is huge corruption at the state level. And I would like to know whether you are funding the states also, you are involving the states also in this initiative. I don't know. So you please educate us. Thank you very much.
Of our portfolio is to private sector. we are in a way created to get private capital in. That's the primary mandate for us. Crowd in private capital for the sector. Government has already been spending a lot of money, and they will continue to do so because that's how historically infra has been funded. Coming to states, we have been working with several states. Tamil Nadu is also one such state. But it's not the money that we are putting on table. It's the expertise that we wanted states to have. At the central level, the kind of expertise sitting in Delhi, state capitals can't claim the same. So we are having what we call transaction advisory services, where we assist states in building projects of quality, what we call DPR, detailed project reports. So DPR is the foundation on which everything else gets built up. Whether it is technology, whether it is a partnership, whether it is a finance, whether it is other things, inputs. And if you mess up on the DPR stage, the project is more or less likely to end up in a failure. That's where we are building capacity. That's where we are advising states. 2 states we have become public today in terms of names. State of AP, where we are advising them to build their capital, and J&K also, where we are advising to build a tourism infra, other than the lake that we have been so proud of. And other states also we are working on in terms of unlocking capital for them. Let's say at the state level, not many successful cases of InvIT. In road sector, you are very proud of. You must be hearing about it. NHAI has done wonders, right? In renewable space, a lot of private sector has come up in monetizing those assets which are already operational. States also own assets quite a lot, right? But at the state level, there is a lot of hesitancy, specifically when you put completed assets, operational assets for market. The questions are more open in terms of the transfer, valuation, who will own it, who is doing it, what. And that is where governments are a bit hesitant to make decisions. So we have been advising governments, working with many governments actually, sir, because it's a national institution, and the national mandate is about working with everyone. It's not a particular government institution. It's an institution of national importance, and we take it very proudly, very seriously. So that's where we are, sir.
Thank you. One intervention, our friend was mentioning about DPR. Now there is a controversy going on in Tamil Nadu. Tamil Nadu DMK government is saying, last one week development, that central government is denying funds to Metro, Coimbatore Metro and Madurai Metro. I come from Coimbatore, I know. The point he mentioned was exactly right. The problem was with DPR. The Tamil Nadu government did not give the central government proper DPR. As a result of it, they have sent the proposal back to the state government, asking them to make corrections, but they are not doing it. They are claiming that central government is not giving funds. So DPR plays a very critical role, I believe.
Yes, sir.
Before I open the house for questions, I'll take the advantage of being a moderator and I'll ask one question myself. Sir spoke about state governments. I'll go one level down and you also mentioned about municipalities. Majority of the infrastructure that we would require in cities, you said that in 3 decades we'll have 60% of our population living in cities. But given the capacity and the finances of municipalities, we still do not have a municipal finance list, even though our 73rd and 74th amendment have given a lot of responsibilities to the municipality, but we do not have a matching finance list. Now we are also talking about municipal bonds. We've experimented with almost 3 decades now. We've been trying to revive it. But given that majority of municipalities still do not have double bookkeeping system, they do not have basic capacities that we move outside the metropolitan municipalities. Given this scenario, how do we expect municipalities to come up and be in a situation wherein they can take care of basic infrastructure, at least for these cities?
Touching the provincial boards. Funding conventionally has been on devolution path. Central and states, Finance Commission. But the kind of growth that I just gave you lumps into it, almost 3 millennia of urbanization and 3 decades of urbanization are going to be planned. Right? So 3 millennia is going to be completed in 3 decades. And the cities are exploding. I won't say they are just growing, they are exploding. Funding via devolution cannot be a smarter strategy to accommodate that kind of growth. They have to go private, tapping resources. Today the bond market is pretty mature, I would say. But the share of municipal bonds in that market is very immature. The outstanding size of corporate bond market in India is 5 trillion today. Compared to that, ULBs have, I think, total issuance closer to 3,500 crore only. We are talking of 55 trillion, and here 35 billion. So we have not even scratched the surface there. How can they get doing? You have just identified the right cause, because market trusts transparency. It trusts visibility on the revenue path. So when you conceive a project, you have to show the market that it is not dependent on government transferring money to service it. Your project should be commercially viable enough. Can you do that? Because willingness to pay is not much shown by the citizens of our urban centers. The basic amenities that we talk about today, while we want the world-class standards in terms of amenities, we don't want to pay world-class fees for that. That's also a thing. So I think we have to move parallelly on many counts. Equipping our governance bodies to become better at what they are doing. Record keeping is one aspect of it. But also educating citizens to become residents of urban areas is a privilege, and privilege also comes with a certain cost. We can't be shy away from paying that cost. So we have to raise both standards, and we are doing that. In fact, our institution has done 2 capacity building workshops for urban local bodies, and I'm glad to share, sir, more than 70 odd municipal commissioners, which are pretty high ranking officials. ISS are mostly leading our larger cities. They attended this workshop where we explored together how best we can take it forward. So going forward, if you look at the potential in US, the urban local bodies issuances, mini bonds, what we call, is $4 trillion. That's the size they have acquired. China does it very well. The local government bonds, LGBs, very, very decent size. India has way to go. And the way we are trying to enable them is that we are offering both comfort as an investor. So when some municipality comes with let's say a mini bond, we are there to subscribe to it if nobody else does. We also help them get other investors in by offering what you call PCE, partial credit enhancement, where we give the first loss guarantee. If it defaults, we will pay. So as investor, you don't get to lose. So that way, we are developing the market.
Do you push for revenue model as part of the DPR? Because the problem is most of the municipal corporations are politically very sensitive. They don't want to charge anything because it may have a political ramification.
So there are 2 ways to do it. One is, of course, DPR is the crux of everything that we talk about. But today, the urban reality is also different. Let's say waste disposal, solid waste disposal. When we enter in any city, the first welcome we get from the dumps of waste, right? But today, technology makes it possible to make useful case for the dump also, right? You can make fertilizers out of it. You can power, electricity by burning dump. There are ways to do it. Technology makes it commercially viable also. There are cities after cities making examples of it. Even our own Indore has done it, right? Surat is planning for that. So we have debt products specifically designed for 2 things, what we call waste to energy and wastewater treatment, right? So if treated waste water can also be used for maintenance of maintaining, let's say we need our roads to be dust free. And if you use treated water, what's better than that? Why you need to have potable drinking water used for that? So there are many ways in which things can be used for productively, and I'm more than hopeful. Actually, today I will be happy to play evangelical role when it comes to ULBs. You can pitch me anywhere, anybody. I will be there. Devil's advocate. Give them power, give them responsibility, and then take them to account.
Binay, I have a basic doubt. Which is the most developed state in terms of infrastructure in India?
I wish I knew that answer. But
city you can say? City.
I think Delhi outscores everybody else.
Okay. Even Mumbai?
Yes. Mumbai is catching up. Mumbai is almost a decade behind.
I have a small observation. If you mic मिलेगा?
मैंने इसीलिए पकड़ रखा है.
So
it's on.
So on 5th of November, there was an article in Economic Times which says that NaBFID will be repositioned as a global financial institution. We are only talking about what is there in the open domain, and it appears that Sujit ji talked about the Global South, and most of you are aware of Global South. For almost 10 years now, Prime Minister Modi has been talking about reforms in multilateral institutions. that organizations like IMF or World Bank must consider the challenges of global South countries and have global South solutions for global South problems. So there was an alternate in terms of China coming out with Belt and Road Initiative, but it created debt trap. So there's an IMF model which they will force your political influencing also. If you want loan from them, you have to align with them. You have to go and fight their war almost perhaps. Or there is a Chinese model where there is a debt trap issue. What is the third alternative? So you see the Voice of Global South Summit that India did, 125 countries. African Union, which Sujit mentioned about G20 in 2023. And now India coming up with a bank of its own, which is being termed as Infrastructure Development Bank, which perhaps will be financing infrastructure development to cater to the specific requirements of global South countries, 120. So there's an organization called Dakshin, Global South Center for Excellence in the India Habitat Center. You must visit that place one day. And you will realize that India is coming up with a completely alternate model of developmental finance and taking care of global South requirement, which is one of the reasons the West is so upset with us. If you see Trump South saying so many things, we are growing so fast and still he thinks that we are a dead economy, is because he wants the existing status quo to continue. I just had this observation.
Thank you, Pathikrit. First, we thank Sujit Kumarji that he's here with us, and we had a very enlightening session. We learned a lot. And as Pathikrit ji said that we are building our own institutions for two reasons. We must have our own institution in financing, and many global institutions, they have been exposed that they are acting like tools of some particular interest groups or particular country. Even institutions like UN, they are losing relevance, they are losing credibility. So it's a time that when we come up with new ideas, we build up some institutions of our own. And I think NaBFID is one of those such very successful examples, you can say. In a very short span of time, it had proved itself that our institutions and very nascent new institutions also, they can create wonders as NaBFID has done. Thank you, Sujit ji, again for having such a wonderful session. And thanks, Professor P. Kanagasabapathi ji. And let me tell you about Professor P. Kanagasabapathi ji that he is a professor of finance. And his research on particularly on how the communities of India, they developed businesses. So community-driven businesses, especially many businesses, hosiery business in Coimbatore, the Sivkasi business of this what we call patata crackers. So I think some 2.5 decades back, he has researched on these community-driven businesses and how that evolved as a model, very sustainable model and a very inspiring model, in fact. So I have read those reports, those researches in my college days. So thanks, sir. You are here with us today. And thanks, Abhishek, for making everything happen today. And Sujit ji is here. So because of him, and we must all thank Abhishek for that.